You're scrolling through real estate listings late at night, and every house that isn't falling apart costs around $500,000. The kitchen looks outdated, the carpet is beige, the basement has fake wood panels, yet the listing agent still calls it a starter home. Meanwhile, you're doing mental math with your salary and wondering if you missed some huge promotion. But here's the truth, it's not you, it's the math, and the math is brutal. Today we're going to answer a simple question. Who can actually afford a $500,000 house in 2026? Not who a bank will approve, but who can realistically afford it without turning their life into financial stress. Because qualifying for a mortgage and sleeping peacefully after signing it are two very different things. Right now, in many U.S. markets, $500,000 is the baseline price. That doesn't buy a mansion, it buys a small 3-bedroom house with a yard the size of a beach towel. The median household income in the U.S. is about $84,000. So we're asking households earning $84K a year to buy homes costing 6 times their income. That should already sound insane, but it gets worse. Let's start with the down payment. Traditionally, it's 20%. On a $500,000 house, that's $100,000 in cash. The median savings account in America has about $8,000. That means most people are roughly $92,000 short. Even if you save 10% of your income every year, which very few people manage, it would still take around 12 years just to save the down payment, and that's assuming prices don't keep rising. So most buyers choose a 5% or 10% down payment instead. That unlocks a new monthly expense called PMI, private mortgage insurance. This is essentially a fee you pay because you couldn't afford the 20% down payment, and it usually costs $200 to $400 every month. Now let's look at the mortgage itself. With a 10% down payment, you'd borrow about $450,000. At current interest rates, around 6 to 7%, the monthly mortgage payment lands near $2,800. But that's just principal and interest. Now add the real costs of owning a home. Property taxes, about $500 per month. Home insurance, about $300 per month. Maintenance, roughly $417 per month. PMI, about $300 per month. Add it all together, and your housing cost becomes roughly $4,367 per month. Financial advisors say housing should cost no more than 28% of your income. If $4,367 equals 28%, you need an income of about $187,000 per year. Even using the bank's more lenient rule, you'd still need roughly $150,000 per year. Only about 10 to 20% of U.S. households make that much, meaning most Americans cannot comfortably afford a $500,000 home. That's not an opinion, that's math.